Hey guys, welcome back. The era of betting against Intel, in my opinion, is officially over. As of this week, the stock has surged 240% year to date, and it hit a staggering almost $125 a share on Friday. And this was not a retail pump. We are seeing massive, unusual trading volumes and institutional conviction in this stock that we haven't seen in 2 decades. The Silicon Desert of the American Foundry story that we talk about that's building out there in Arizona, it just got a $500 billion valuation. It's because the Taiwan plus one strategy is no longer a boardroom theory. We are seeing Apple and NVIDIA, they are reportedly finalizing deals to move advanced M series and Blackwell successor production to the U.S. soil. This is the reemergence of the American Foundry. And what we're seeing in Arizona is not just Intel, it's TSMC, it's Amkor, it's others. But we also see Samsung in Texas. And Micron is a huge part of the story with the fabs they're building in Idaho and Clay, New York as well. But if you're not tracking the yields on what we're seeing in Arizona right now for TSMC and the yields for Intel and the equity stakes that the U.S. government has taken in Intel and how those are paying off massively with returns, you are behind the trends in the American Foundry story right now, because it's no longer about can Intel survive? It's about now, how high will Intel go? With a $11 billion U.S. government stake in the company that's now worth over almost $50 billion in the open market, Intel is no longer just a tech company. It is a sovereign bank tech powerhouse here in the U.S. Today, we're going to talk about how the stock performed. We're going to look at this performance this week. We're going to look at the dark pools and some of the stock and some of the options flow to just see if it gives us a signal if the strength is still there for the stock. What should we expect when the opening bell hits on Monday? We're going to also talk about that Apple Foundry leak that the Wall Street Journal put out, and I'll show you the impact it had on the stock right when that was published. And finally, we're going to talk about some of the biggest tech names and why they are suddenly lining up to get their hands on Intel Silicon. That's what we're going to break down in today's video. But if you haven't done it already, make sure you hit like, make sure you subscribe to the channel. Guys, let's move over and just take a look at some of the charts and just see what Intel did this week overall. And as you can see on the screen, Intel closed just under 125 a share, as I mentioned. Massive mover on the NASDAQ 100. In fact, let me pull that up and show you. You can see Intel right here, 14%. One of the biggest movers in all of the NASDAQ 100 this past week, or on Friday at least, but it wasn't as big as Micron. Micron 15.5 was a massive mover overall. You can see it was the biggest player on the NASDAQ 100, but Intel was right there. They had a fabulous Friday, a fabulous week. They were up almost 25% for the week. Let me pull that down. You can see the 1 week, 25.44%, but look at the year, guys, 483% on the year. That is a parabolic move that you see right there with the stock overall. It was, we know many times it opened up the year. You can see it was trading in about $20 a share, just over 20 to now we're up over $100. We were up to about 125 a share. 14% growth, like I said, but look in the after hours, putting a little more on, another dollar added to the base at 126 right now, still trading below the 130 mark that we hit on Friday, a new 52-week high for the stock. I'm going to show you why in a moment. But I also want to just show you this company has not been re-rated. We look at the fair value price of $56. We look at the price target, the average analyst price target of $82 overall. The stock looks extended based on those numbers, but those numbers have not factored in the foundry business. It's not factored in the reality for Intel in today's market. Let's jump over and take a look at the 5-minute candles. Few things I want to draw out. Obviously, you can see it right in the middle of the screen, that huge extending staircase that we have right here. I'll get to that in a moment because the stock went absolutely vertical. But let's see how it opened up. We know we closed Friday. This closing, on Thursday, this closing candle was about 109, 110 a share. It immediately gapped up to this and closed in the first 5 minutes of about 114 a share. So nice pickup. We saw that in the pre-market coming in on Friday. We knew there was going to be a bit of a gap up, and it just continued to drive up. We saw continued support here, you know, a little bit of sideways consolidation, but kind of moving upward. And then right about here, and this 5-minute candle closed at 117. The story came out from the Wall Street Journal that just created a massive vertical ascending staircase in the stock. We went from 114 essentially to 130, about a $16 gain in 25 minutes. A huge vertical move for the stock. And look at the volume underneath. You could sport it as well. And look at the RSI. Not surprising that it just went bananas way over the 80, giving signs that it was overextended. That probably drove some of this selling here, a little bit of other algorithmic selling. We see a little profit taking possibly, but when you see an RSI get to that level, it triggers some algorithmic selling in the systems, and that's what we saw. But the nice piece is that the stock held. It held that 124, 125 range. It didn't drop back down to the 114. It kind of stepped up to a new level. And the question I have is 124 the floor now for Intel? Will we see it push back to where we saw here? This candle hit the 52-week high of 130 a share. Will Intel start to move back towards that 130? Will it break through? And will we get into a blue sky scenario like we've seen with so many other AI stocks this past week? Well, so let's take a look at some signs where I think there may be, could maybe say yes, that support will be in there. And we'll particularly look at some of the block trades, the big stock block trades that we saw. And I want to call your attention to a few. First one I want to call you to is that happened. And guys, as you know, I'm looking at the market chameleon data. This shows all the huge block trades for any company. I have it filtered to any block trade that's over $10 million in value. So that way it just makes it easier for us to review on the screen. But I want to call your attention to the first one here, which is at 1 in the afternoon. It was about a $200 million trade, big whale trade, just over 1.5 million shares. But look at the strike price, 126.51. So this is above that time where the stock was trading, was hovering in that zone. Actually, it was probably right above that explosive time where they moved in. They wanted more shares of this company. They had to have it at that 126 level. And then if we look at the closing cross, massive support. So it's almost $2 billion here, 15 million shares almost. But based on the move, I would say some of this is rebalancing from funds. We know Intel is on those funds, and they're just with that vertical move we saw midday. Some of this is definitely some of the rebalancing overall, but still massive conviction there at 124, just under 125 a share. Again, another sign that this could be a support level for the stock. And then I want to draw your attention to 4 stock trades that happened after the close. So this one, it's only 18 seconds after the close still, but it means a lot. It's a $190 million trade for 1.5 million shares overall at 124. And then if we jump up later, 48 seconds later, $137 million trade for over 1 million shares. 5 minutes after the close, we have a $146 million trade for, again, just about 1.2 million shares. And then an hour after the close, the $200 million trade, a big block, a whale moved in, wanted these shares for a 1.6 million shares, again, at 124, 125 level a share. So these are huge kind of signs overall that we've got massive whales that are just vacuuming up the supply that's in the market right at 124.92. That's $672 million in trades, just in those 4 block trades that I showed you. After the market had closed, all at 124.92. So the question to me is, will that be the new support level now? Will we see the stock open up on Monday and stay at that level or grow above it? That's what we have to track for the first 30 minutes, first hour of the day, because if we can stay above it, then I do think we have a chance to move into some blue sky territory with this stock, break that 130 level, that's the new 52-week high, and start to move into new areas of support and conviction for the stock, just like we've seen with other AI stocks. And I want to show you another sign of from calls, just some call flows that, again, give us a bullish sign. If you can look, there's a few signs and signals here of support at higher levels. I'm going to call out just a few because we have in May, and we're talking about next week, we have some calls that are expiring on May 15th for 130 a share. May 22nd, 130 a share. But look at these right here. In the June timeframe, mid-June, June 18th, $155 a share across the board. So there was no question. There was bullish sentiment in the call flows, in the option flows for I keep wanting to say Micron, for Intel on Friday. And these whales that traders that had those calls at 155 a share, they're expecting about another 25% or so movement for the stock in a very short period of time. So this is another sign for me, or a signal for me, where I think we have an opportunity to break that 52-week high, to break that 130 level again, and see this stock start to move into that blue sky territory, as I mentioned. It's all because of the partnerships that we're seeing with major big tech firms, major hyperscalers across the board for Intel. Let's go to the first one that broke, that I think just caused that huge ascending staircase that we saw right in the middle of the day there for Intel. And it's this what you see on the screen, this preliminary deal of Apple and Intel. They have reached this preliminary foundry agreement where Apple is diversifying away from TSMC. They've been a 100% TSMC house, and now they're moving towards domestic U.S. production for future iPhone and Mac silicon. They're also going to move some of it to TSMC's U.S. production or U.S. fabs. In fact, I think TSMC has a goal of having 30% of their production here on U.S. soil, which is outstanding. But this deal is about Apple and Intel. And we've been rumored for a while, but this is a clear validation of Intel's manufacturing prowess. It's a clear validation, of their foundry overall. Apple cannot rely 100% on Taiwan anymore. And it isn't just that Apple needs more capacity. Apparently, they're moving and shifting to Intel because of their power via. The fact that Intel's 18AP fab is the only node currently delivering the thermal conductivity and efficiency needed for Apple's next-gen M series, the AI cores, they need it to run without thermal throttling. We also know that Intel has had a long partnership with NVIDIA, and NVIDIA has put a $5 billion stake in the company. They have been working on projects together overall. We know that they've been working on, for a while now, they have been working on their x86 RTX system on a chip. So it's a high-performance AI PC. This puts NVIDIA and has put NVIDIA's power directly into Intel's manufacturing ecosystem. But apparently they're also now developing a variant for the next-gen Blackwell successor, specifically a variant that will be developed and manufactured in Intel's 18A. So this is a great sign for them as well. When you have somebody that is such a powerhouse of NVIDIA, that's part owner, has investment stake in the company, but is also shifting their production, it's another validation, of the foundry for Intel. And we can't forget the hyperscalers and the commitments they made. If you look here, we know that the foundry pipeline for Intel, it now exceeds $15 billion in lifetime commitments, led by Microsoft and Amazon. And if I scroll down here a little further, you can see right here that Intel confirmed that it expanded its foundry agreements with Microsoft for custom silicon on the 18A node, plus a new Amazon AWS Trainium derivative slated for 2027. These are multi-billion-dollar lifetime contracts that justify the foundry capex. You'll also see right here, Axios reported Intel's foundry pipeline now includes signed lifetime commitments above $15 billion, up from roughly $10 billion a year ago, just at a year end of 2025. So this is a huge sign for them too, but it just doesn't stop with Microsoft and Amazon. You look at what we saw come out about Tesla, that Intel was the secret winner of the Elon Musk Terafab build out. This is a huge sign for them too. So they're making massive partnerships and getting inroads with all of the huge players. And when you see that Musk's Terafab project is to build, like Intel is to build custom AI chips, not only for Tesla, but for SpaceX and for xAI, they're all going to use the advanced 14A manufacturing process from Intel. This means that Intel now has secured a roadmap through 2028 with probably the world's most aggressive AI buyer in Elon Musk. And finally, we did see a report around, Google's extending partnership with Intel overall for the AI chips. We know they've been working on their CPUs, but now Intel's newest Xeon 6 CPU will run AI training and inference workloads for Gemini and for Google's products. So this is also a big move, a big announcement. So I think if you just look at what I just went through, think about the partnerships that Intel has, starting with Apple that they just announced, huge moment for them. They have NVIDIA, they have Amazon, they have Google, they have Microsoft, and now they also have space. They have the Terafab with Elon for both SpaceX, Tesla, and xAI. So they're very well positioned here in the U.S. They're positioned with all of the big players overall. And it really should give us confidence that their foundry business is becoming a reality. It's no longer a dream. It is a reality. And then when you look at what the government is involved, and let's just pull it, because I told you earlier, the government had a massive stake in the company, and it's paying off significantly. It's worth $50 billion now in the open market. But if you scroll down here, you can see the U.S. government invested $21 billion in 16 deals during Trump's second term, with 5 of 8 public companies. They're now outperforming the S&P. The middle one is Intel. So an $11 billion Intel investment in August of 2025 has yielded a $40 billion paper profit as shares have risen 370%. And they call that out here, right, where it's, risen 370%. But down here, and as of Wednesday afternoon, this past Wednesday, the U.S. government's 433 million shares in Intel, which is, I think, about a 10% stake in the company. The largest single investor in the company is the U.S. government. They are worth now $49 billion, $40 billion more than the government paid for them. That's a massive return, but it's also a massive interest that the U.S. government has on the success of this company moving forward. So I think when you put it all together, what does it mean for our portfolios? We're kind of looking at a stock that is currently consolidating. We saw that sideways digestion for Intel, right in that 2124, 125 range. So I think if we can flip 130 from resistance to support, if we can break through that 52-week high level and get into that blue sky territory, that we are in uncharted territory for the stock. I think when you take a look at the dark pools and you see that massive support around 125, in my opinion, that is the floor. And as long as we can stay above those whales entries, the trend will be our friend for Intel. The next earnings for them, I think it's in mid-July. It's a July 23rd, actually. So expect more foundry customer announcements before then to keep the momentum alive for this company. They want to keep this in the news. They want to make sure people understand how they're moving and growing the foundry business so it continues to just get validated. I think it'll build into the price targets for the stock. So analysts, we know they're calling the stock overvalued because they have a fair value of $56 on it, which is ridiculous. But when the price in the market is 122% above consensus, it means that the smart money knows about the revenue stream. They've already factored in the foundry business, and the traditional models haven't accounted for it yet. Intel is definitely starting to be valued as a foundry, or it should be valued as both a foundry and a product company. And if the foundry business reaches break-even levels in 2027, which current yields suggest is possible, in my opinion, this stock has another 30 to 40% room to run just from a margin expansion. So Intel, guys, hopefully you've seen everything I've walked through, that they have moved from a legacy chip maker to a centerpiece of the global AI infrastructure, particularly here in the U.S. And with Apple, NVIDIA, and the U.S. government all on the same side of the cap table with them, the American Foundry is no longer a dream. It is a $627 billion reality. This channel will continue to track the whale flow associated with Intel. I will follow the data. I will follow the share movement and share it with each and every one of you so you can stay ahead of the trade. And if you haven't subscribed to the channel yet, you're missing out on the data that moves the market, the data that I share each and every day. So make sure you hit that subscribe button. Make sure you become part of the strongest community that we see on YouTube with about 11,000 strong now. So guys, I hope you have a great Saturday, and I'll see you on the next one.